yesterday. Now Elon Musk is U-turning on what his team was saying about creator monetization, probably because it got a lot of backlash and a lot of scared text messages from venture capitalists investing in XAI. But now the information is reporting even more scary news about what's going on with X. We're going to talk about it. Now, first, I want to bring this up. Yesterday in my video, X canceling pay out of money, in the video, I talked about how XAI is using, apparently, according to Alex Spiro, which is Elon Musk's attorney, they're using PwC audits. And I talked in my video about how PwC audits are not PCAOB audits. PCAOB actually sanctions PwC because their audits are crap. Now, somebody, and I pinned the comment, somebody wrote here, as a CPA, I believe you when you say PwC audits are lacking in quality. Yup, they certainly know about disclosures, but audit procedures? Yikes. Somebody else goes, hiring PwC to do an audit is like taking out a loan on a BMW. It's all for looks. Oh, yikes. So this is why I made that clarification yesterday. I'm like, we actually use a PCAOB auditor for House Hack, like IPO grade auditing, because it's like, no, we got to do a really great job here. So yesterday we were like, is X running out of money? And we were setting up like all this like sudden funding with SpaceX, and Elon's like, oh, those loans are fake news. And then it turns out he's taking out debt. People are like, which then sort of begged the question like, all right, well, maybe it's all fake news. Maybe they're not actually running out of money, right? And then Elon this morning is like, no, we're actually not out of money because we don't want to pay creators. We're actually underpaying creators. We should be paying creators more. And so Elon Musk is trying to puff up this idea that, no, we're not broke. We actually have lots of money, which, I mean, I hate to say it, but that's exactly what, Sam Bankman-Fried said. Like, we're not broke. We got lots of money. It's like, all right. So then it's like, all right, well, maybe it's all fake news. Maybe Elon isn't actually going broke with XAI. And then there's this report that came out, which maybe it's all FUD and fake news. We don't know, right? But then there's this report that comes out, XAI's unusual deal making to fund Elon Musk's Colossus 2. And this is really interesting because here you've got a story about what debts Elon's actually paying here. Are you ready for this? This is crazy. So first of all, XAI's funding arrangement now, where Elon Musk is bragging about wanting to buy 500,000 NVIDIA chips, apparently they can't actually afford to buy the NVIDIA chips per the information. Instead, they are going to utilize a special purpose vehicle put together by Valor Equity Partners. And Valor Equity Partners is going to help put together a $20 billion leasing vehicle so XAI can lease NVIDIA chips. But Valor Equity Partners, now this is a really interesting one. Okay, understand this. Valor Equity Partners, let's write this down so it's nice and clear. Valor Equity Partners. Okay. Valor Equity Partners. Organizing $20 billion lease deal to XAI, but they're also invested in XAI, and one of the operators at Valor is an exec at XAI. So you got like this sort of like circular bailout where it's like, oh yeah, Valor will set up a lease for XAI because XAI can't actually afford to buy all of the chips, and that'll help protect our investment. And yeah, we're insiders, so we kind of realize like how crappy the financial situation at XAI is. Now, why that's interesting is because of the terms of the actual leasing that are going on. So the terms of the actual leasing, kind of scary, as well as the debts. First of all, the debt package that XAI is raising has a 12.5% interest rate. That's insane. That's like worse than a personal loan or a BNPL loan. This is crazy. 12.5% interest rate. Then, listen to this. The special purpose vehicle is composed of $7.5 billion in equity anchored by Valor and $12.5 billion in debt. NVIDIA is contributing $2 billion. Fine, we know that. That's the $20 billion raise we talked about yesterday. But we thought that Elon was going to use the money to actually buy the chips. Turns out that's wrong. The special purpose vehicle will actually be renting the chips to XAI for several years, which will then have the option of purchasing the chips. So it's a lease option is what it actually is. Now, Valor is a venture capital firm, and they've had a lot of involvement with funding for Elon Musk. The chief investment officer at Valor sits on the board also at SpaceX. So you see the Valor guy sits on the board at SpaceX. The rumor is you've got other executives inside of XAI who are also VC bros that are connected with all this. That is a little less clear. That's a little looser, so it could be wrong. But this is interesting. The special purpose vehicle is only going to be paying for the chips, not any of the infrastructure. But using the special purpose vehicle saves XAI from having to put up the cash up front. So it basically reduces the cash outlay today, but potentially makes the chips much more expensive in the future should Elon want to eventually buy them. The problem is Elon's company is basically out of money to buy these 550,000 chips or million chips or whatever, because he keeps saying different things. So now Valor, being an investor in XAI, potentially puts the firm in an awkward position if XAI can't make its lease payments. Because if XAI can't make its lease payments, then Valor needs to collect on that default, but then it potentially makes XAI, the investment in XAI, look really bad. Now, what's fascinating to indicate the risk of this, because obviously everything could be fine if everything keeps going fine. The problem, though, is this. This is where people are wondering, like, we've already got a 12.5% interest rate, which is really expensive on some of the debt. But then listen to this. The deal also contains significantly more equity, almost 40% of the total, than a typical data center deal. So Meta, for example, raised $3 billion in equity and $26 billion in debt. 3 divided by 29 is 10.3% equity to debt. So if basically for every $1, they basically were able to take on like $9 of debt. That's crazy, but that's Meta, which people don't think is going to go bankrupt. So Meta, for every $1, they get 9 in debt. Musk, he has to put up $7.5 to get 12.5 in debt, which basically means for every buck you're putting up, you're not getting anywhere near as much. You're getting like $1.4, $1.5 out for every dollar you put up in debt. Not as ideal for Elon Musk, and that's because people say XAI is burning too much cash, which is why these rumors started circulating about X not being able to afford monetization, considering getting rid of the monetization program. And then, of course, Elon probably got blown up with a bunch of texts of people going, wait, are you guys out of money? Like, this sounds really bad. And then Elon, oh, no, we're actually underpaying creators. That's why there's talk about this. We actually want to pay them more. Now, what I wouldn't be surprised by is Elon Musk pulls something like, hey, we're going to pause payouts to creators while we come out with a better system. Meanwhile, they'll just never come out with a better system, maybe. But a lot of this doesn't sound good for XAI. And then, of course, this is the information. So maybe it's all wrong. Like, maybe it's all just like clickbait fugazi and it's all wrong. And maybe there are no financial problems at XAI. But when you factor in that Elon Musk has maybe not the best auditors at XAI, his family office is running the financials at XAI, you have complaints about the monetization program, which could be related to an affordability issue. The interest rate you're paying at XAI is 12.5%, which is nosebleed. And you're only able to take out debt when you put 40% down, when Meta's able to put 10% down. And that's from your friendly VC firm. Some would suggest that the financial problems at XAI may be substantially worse than we presume, which then makes you wonder, as a Tesla shareholder, should you be approving this deal to invest in XAI? Now, we were talking about this a little bit in the Meet Kevin community chat yesterday, because we have a new community forum here, and we were talking about this idea about, what if Elon doesn't get the investment in XAI, is he going to potentially start dumping Tesla shares? These are the kind of conversations that we like to have in the Meet Kevin membership, you know, along with, for example, calling the top in MP Material. Knock on frickin' wood, that was great. We, on MP Material, we were looking at 100 as where MP Material would go. We ended up triple rejecting 100, and we're like, we's going down, boys. It's down over 15%, almost 16% right now. That was a call in the Meet Kevin membership. If you're not part of that yet, make sure you join over at meetkevin.com. You have lifetime access, and it could be tax deductible as well. But consider for a moment, all of these things together, they create some serious risk factors for XAI, but also Tesla. Because think about what you end up getting. So the Tesla proposal, Tesla shareholder vote proposal, let's go ahead and grab it. So here we go. Take a peek at this. Tesla shareholders will soon vote on whether to let the electric vehicle maker invest in XAI's startup. Now, keep in mind, usually, like any investor can buy Tesla. So by swiping up on Robinhood and buying Tesla stock, you could indirectly then get exposure to XAI. But XAI doesn't have the financial transparency that Tesla does. So you actually sort of blur that financial transparency that's required at XAI and potentially allows for more funding at XAI from retail investors by approving this. In the latest proxy statement, along with the 10-year pay package worth up to $1 trillion, there's a proposal from Stephen Hawk from Florida, a shareholder with a $2,000 stake in the company, saying, Tesla's integration of Grok into its vehicle demonstrates the tangible benefits of collaboration with XAI. Mind you, you could literally just plug in GPT or anything through Bluetooth, frankly. Like, this isn't that big of a deal, but whatever. Tesla's pivot towards AI-driven technology, including FSD, I mean, that was never a pivot. Tesla was always a proponent of FSD. Robotics, we'll see, blah, 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 blah. Okay, this is his little statement, fine. And there is now a potential vote to allow shareholders to invest in XAI. If Tesla does end up investing in XAI, it would be the second of Musk's companies to do so. SpaceX already put $2 billion in, probably because they couldn't fully fund it, unfortunately, so had to sort of reach over to complete the funding round. But anyway, some Tesla shareholders have argued that XAI is a rival to Tesla. No, I don't think so. Hawk's proposal comes as Tesla grips with weakening EV sales. This is true. And Musk obviously wants more of a controlling stake in Tesla. Blah, blah, blah. But an investor noted that XAI could help Tesla reach its market cap goals because of excitement around XAI and Tesla together is going to move Tesla's valuation higher. Right. Excitement is going to make the value of the stock go up. Not earnings, not fundamentals, not performance metrics of XAI relative to relative to OpenAI, which outperforms Grok on a revenue basis by 20x, and Anthropic outperforms them by like 10 to 15x. None of that is actually going to matter. It's just excitement that matters. This seems bubbly, man. I don't know, man. I don't love that at all. I don't like it. You know, I'm tempted to vote solely against this XAI purchase because all it does is create a cloud of risk for Tesla that you're throwing good money after bad. We should be throwing good money. The billions of dollars that you're going to throw into XAI to go burn on NVIDIA leases, you should be throwing at making a cheaper model that you promised. And then when Reuters said, oh, the cheaper model is canceled, you said it was fake news. And then a few months later, we're all like, hey, yeah, no, the cheaper model's canceled. Come on, man. I don't know. I don't like it. Keep them separate, man. I don't like it at all.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try
XAI may be going bankrupt and or ending its creator monetization program soon because they's burning money hand over fist and it ain't good. Ooh, that's at least according to internet rumors and what people are saying on social media, so it could all be totally wrong. But in this video, we're going to report on those rumors, and we're also going to provide some sus evidence that kind of makes people start scratching their head going, Oh man, the clock time might be running out over here. So the first exhibit I'd like to point you to is this. Here's this guy named Zoomy Zoom. Okay, Zoomy Zoom literally has a tagline that's Chief Viral SH9T Poster at X, and quote, just a VC tech bro living in an AI slop world. Right. So apparently the guy was complaining that he got 173 million impressions and only made $1,500. So the guy was pissed that he didn't make more money. And after being a subscriber of Nikita Beers, Nikita, who is the head of product at X, writes, check again. And then what happens? Magically, $10,000 appears in Zoomy Zoom's account. And Zoomy goes, oh my gosh. Well, holy F is actually what he wrote. And Nikita says, don't spend it all in one place. Almost clearly and directly taking ownership, almost like a parent giving their child a $50 bill for a date night with their new girlfriend. And it's like, don't spend it all in one place, honey. So obviously, the head of product and Nikita is taking ownership for directly depositing $10,000 into Zoomy Zoom's account after he complains and tags Elon Musk that he wasn't paid enough for his viral SH9T post. He also has a tag, the Kalshi tag here, which suggests that, hey, you're in that VC circle, you're in that fundraising startup world, and you're connected to people who are basically bailing out X. Okay, that gets to the next point. Nikita, who is the head of product at X, is also an advisor at Solana and a venture partner at Lightspeed, and an ex-founder of some other apps. So very well connected in the venture space. And this is nothing to say that's bad about Nikita. It is, however, to say that this person is clearly very involved in the XAI monetization loop, not only for creators, but also likely the biggest source of expenses next to Jensen Huang's NVIDIA chips for X. And it might be exactly why there's now talk about ending the monetization program, because it's likely that the monetization program is too expensive for X. Imagine, for example, if GPT was sending out a lot of money to all of their users. They're already burning a ton of money on chips. And now all of a sudden, they're burning money paying out creators. And so what you got was this post at the end of September from Nikita that says, at this point, I think creator payouts do more harm than good. We need to off-ramp to a different system. Okay, this is really interesting. So it's not saying that the monetization program is dead, but literally the guy who's capable of directing monetization payments is like, you know, this monetization program isn't that good. And this is leading to a lot of debate. A lot of people are like, you know what? That's right. We shouldn't have to incentivize people to post, because then they're just going to try to engagement farm. Like, you know, people post up these posts like, what do you notice about this picture of Taylor Swift's thighs? And it's just pure engagement farming. Like, it's not providing any value at all, right? But that gets a lot of engagement, which gets monetization. The stuff I post doesn't get a lot of engagement. Like here, Modi assured me today India will not buy Russian oil. Now we need to get China to do that too. Or drug cartels have world-class, very fast speedboats, says Trump, but they're not faster than missiles. And I'm like, damn, that's kind of badass, right? Or like earlier, I'm just like, who's dumping? The stock market was selling off briefly. Or like this one. I'm literally shaking with excitement over what my legal tech broker and crypto team just revealed we are launching with HouseHack/reinvest soon. Total game changer for real estate, real world assets, tokenization, and reinvesting. Stay tuned. I'm gonna make my boy Vlad jealous. I get 127 likes, 128. There, I was born on 128, so it's kind of cool, right? Where do you get all the time to do this? The Meet Kevin membership, of course. On which blockchain? We, by the way, are talking, like a lot of people have hit me up after I mentioned Solana, Ethereum, XRP all being considered. Even Cardano was considered there for a moment. Yes, by the way, HouseHack owns Reinvest. And there are some questions here about tokenization and stuff. Anyway, that's all totally a topic for a different video. Sorry, I get on these tangents. But anyway, the point is, this guy's a VC, bro. And VCs are the ones who are funding the snot out of XAI right now. And so when a VC bro complains, what a surprise, they get a direct subsidy. But what's actually going on? Like, who actually runs the fundamentals and the finances at X? Well, according to Wall Street Journal, the people who run the financials at X are actually just Elon Musk's family office. So now Elon's attorneys are pissed about that. They don't want that coming out. But apparently, the people who oversee Elon Musk's financial operations, his personal family office, are the same people who run the financials at XAI. And there are complaints that there is no formal chain of command. Probably it just goes through them and then Elon. It's almost like a piggy bank, basically, for them. But at this point, it's just a money-losing piggy bank. And these people have been directors and still are of Elon Musk's family office. There are a lot of fears that Elon's got to do whatever he can to keep the ship alive because this is his tool for fighting Sam Altman. So whatever needs to be done to keep venture capitalists happy is what they're going to do. And maybe that's why we saw that payment to that creator, because X is fine. Look, we could pay you 10 grand. But on the other hand, we probably need to shut down this program because we're paying people too much money. Now, why is there talk about potential frustration? Also, well, remember, Linda Yaccarino left. She's the CEO of X. Remember when Grok went all anti-Semitic? Yeah, Linda Yaccarino bailed on that. I think now it's like the opposite of anti-Semitic. Yesterday, I actually got in a debate with Grok, and it was like super pro-Israel and anti-Hamas. And like, I was just trying to share like facts because I was trying to educate my son on like how many children died in Gaza. And I'm like, look, this number could be wrong. You know, it could be half as much or a third as much. But even if it's anywhere close to this number, it's still terrible. I asked my son, how many kids are in your class? And he's like, 24. And I'm like, did you know that in the 2-year war in Gaza, a classroom per day of children was killed? A classroom per day of children was killed. So, I mean, this is just my opportunity then to go, so don't tell me you're having a bad day, son. Like, we gotta be grateful for what we got going on here, because that's freaking terrible. I'm like, 50 mommies and daddies died a day in Gaza, and don't tell me they were all Hamas. Hamas is a scumbag, shitbag group of terrorists. But don't tell me they were all Hamas. But we don't have to go into that. We just have to be grateful that right now there's peace. Hopefully for now, and hopefully it lasts long. And this isn't an Israel topic, right? Like, I have no bone to pick with anybody unless you're a murderer or a terrorist. I hate that. Again, what matters here is that a lot of people are worried that X is blatantly running out of money. And so this is where we go, X, are they audited? Because X is burning through about $1 billion per month. They're hoping to make $13 billion by 2029. That's what they're hoping to make in income by 2029. That's 4 years down the road. But that's only because I think Morgan Stanley is kind of forcing them to put together some kind of projection, because otherwise they wouldn't end up getting investors. So you just Google like 13 billion, Elon Musk, XAI, and then do, a Bloomberg story in Morgan Stanley. It's very simple. Like the banks, they don't care what the investment is. They just want you to make the investment so that way you could turn around and sell it. Like the bank just wants to make the fees, get people on the Morgan Stanley platform and make the fees. Here it is. Beyond the frenzy around an AI, as of late, internal numbers the bank revealed to a select group of investors Thursday show a company that anticipates generating $13 billion of annual revenues by 2029. Okay, in 4 years, XAI hopes to make as much money as OpenAI is literally earning right now. OpenAI hits $12 billion in annualized revenue, and it's expected to be more than that. They're probably already at $13 billion ARR already right now. In 4 years, Grok expects to be up at that level. So Grok's like 20 times behind OpenAI. And then Anthropic, they just actually had a story that came out. Where was it? Anthropic, look at this. Anthropic's revenue just hit $9 billion annualized by the end of 2025. That's probably also like 10 to 15x what Grok is doing. So it's no surprise there's a little bit of a scramble here to raise money. Now, what I want you to see is what's going on with audits and financials. So Alex, the personal attorney of Elon Musk, he says that X is audited by PwC. Technically, private companies don't have to be audited. So they're like, well, we're audited, so it's good. Okay. That's true. If you do Reg D offerings, to accredited investors, you don't need audited financials. Now, if you raise from unaccredited investors, like what we do at HouseHack, you go to, househack.com and you're like, yeah, I want to invest in HouseHack because it's backed by real estate and, we've got the AI coming out or whatever. We're going to be updating the website with like real screenshots here of our AI. It's going to be like, we start showing the screenshots of some of our AI, it's going to be pretty sick. But anyway, what's remarkable is when you raise money from non-accredited investors, you have to get audited financial statements. So our financial statements are audited. But we actually chose to go a step further. We get what are called PCAOB audits. These are like the medallion standard for audits. They're IPO grade level audits. They're really, really hard to get. And they're a pain in the butt and they're expensive. But it's good. It keeps everyone honest. And that's what I want. Like I'm a YouTuber, okay? I always look, I go, man, I gotta go like one step further than everybody else to make sure everything's just like above board because people are like, he's a YouTuber, that still has like a negative connotation to people. But anyway, so the interesting thing is the attorney for XAI says that they have PwC audits. But what's interesting is PCAOB has sanctioned, aka fined, PwC on multiple occasions for failing to meet quality and independence standards. So in other words, the audits we get at my little baby startup HouseHack are not only way better than what XAI is doing with their financials, but the entity that does these IPO grade audits and certifies accounting firms to be able to say they do PCAOB audits is basically saying the same company that's auditing XAI is shit. Okay? We're just going to put pieces of the puzzle together here. You got to make your own conclusions. We're just putting the pieces of the puzzle on the table. Now, understand some of the fundraising here, okay? And I wrote this all in the Meet Kevin app. Remember, you can download the Meet Kevin app for free. So, in the Meet Kevin app, I wrote, here's some of the prior funding rounds. Prior funding, $6 billion Series B in May of 2024. $6 billion more in December of 2024. They probably burned all of that money in 2024. Then they did a $10 billion mid-2025 round, which that's the very same deal that Elon Musk denied as fake news, and then 30 days later, they did the deal. This is kind of similar to when Elon Musk is like, oh, fake news that the lower cost Tesla is canceled. And then it's like, hey guys, the lower cost car is canceled. It doesn't make sense to make the lower cost car. Okay, Elon. So anyway, I think this is why I don't get a lot of views on X, because I just dump on like the truth. Like I'll even dump on myself. Like the truth is really what matters in my opinion. And so I dump on everyone. I don't care if it's Biden or Trump or everyone. But if I like something you do, I'll call it out too. But anyway, then all of a sudden there's like this emergency $2 billion investment from SpaceX, which is really weird because SpaceX doesn't invest in other outside companies. So I guess the 10 bill wasn't enough. And now all of a sudden we got to get another $2 billion investment from SpaceX. And then we just got a $20 billion money raise from NVIDIA, Sequoia, Lightspeed. That's where Nikita works. Sequoia, Fidelity, BlackRock, Tribe Capital, blah, blah, blah. And at the end of 2024, they were only reporting $100 million of annual recurring revenue, probably like $500 million now, maybe, hopefully. I mean, that's still good, but it's nowhere near what they're spending. But this last round is not even just equity anymore. Companies are like, nah, we want you to pay this back. It's actually mostly debt. $12.5 billion of debt, $7.5 billion of equity. So now, this is where things get really interesting. Elon Musk comes up with a stock comp plan and invests some money into Tesla, propping up Tesla stock. He basically propped up Tesla stock by the tune of about $100 a share after that sort of enthusiasm, right? I mean, we were tracking the technicals of this for a while. We were like, holy smokes, if we break out a 347, we kept bouncing off 318 over here. I'm like, if we break out a 347, we're going to 414. We've been at 414 over and over and over and over again. This is the technical analysis we do in the Meet Kevin membership every day before the market opens up. You can use coupon code SHUMORSIESTA and join. You get lifetime access. Pay once, you get lifetime access. But what's remarkable here is Elon Musk kind of wants to pump the stock because he wants shareholders to approve Tesla investing in XAI. So in other words, let's take every potential cash flow avenue, like Tesla stock, which is public, or SpaceX, which has a lot of investors in it. I mean, my venture capital company has.
Okay, guys, I don't know what's going on if people are all joining because Tesla earnings just came out and Tesla's getting wrecked. They did miss revenue or whatever. They missed earnings and had higher revenue than expected. But I'm not really here to talk about Tesla, so if you're one of the 100 people that are joining here on X for that reason, I don't know what to tell you, except I just have to wait until this thing sells off and then establishes a base and moves sideways. Obviously, I don't want to buy it right now, but I could be wrong. GM, on the other hand, looks interesting. So let's jump into a little breakdown on GM. There appears to be some accumulation. I know it's less exciting than Tesla, but this is the company I want to look at right now. So here we go. Breakdown time. If you're watching on X, I can see comments on YouTube. And we do this stream a lot. So jump in. Here we go. There is one stock that is about to jump up in price. It is a electric vehicle stock. They just had earnings and they have a collaboration with NVIDIA to do simulations. So this is a huge company. The earnings reaction was excellent. There's a great spot to get into the stock, risking very little, which is the name of the game in terms of mid to long-term investing. So let's get into it. It's not Tesla. It is GM, General Motors. And at the end of this video, I'll tell you about the make $100,000 in stocks in 90 days, or you get your money back guarantee. This is not financial advice. Let's get started. Here we go.
This is Sam Putnam.
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 So here is the NVIDIA collaboration. They're extending their collaboration to incorporate AI and simulation technologies in the next generation vehicles manufacturing process. NVIDIA is the biggest company in the market. This is a major boost for GM. That's not really why GM is most important right now, though. What's most important is some of these earnings results, right? Tesla just came out as of the time of this recording this video an hour, 2 hours ago. And to make it super simple, they didn't beat earnings per share. They did have higher revenue, okay? So you see those numbers there. They didn't miss by much, but they did miss. Now, Netflix wasn't a good sign for Q3 earnings either. Q2 earnings weren't great in general. Most stocks didn't do great with Q2 earnings besides like Reddit. So Netflix missed and then beat on revenue. There's GM, beat, and Intuitive Surgical also beat and beat. However, when we look at the charts, Intuitive Surgical is down a little bit today. Now that's not surprising. The market is down today, but what's so impressive about GM? It's holding, okay? So this is just a picture perfect setup where you can get in, you can risk this high volume close. There's a lot of volume. It closed up here and you risk $1 to make $5, $10 or more. So awesome setup. This is a super important level that it's getting over from December of 2021. And if we really zoom out on a 20-year chart, you can see how big this moment is for General Motors going over this $67 level. Looks wonderful on a quarterly, on a monthly. It's still pretty interesting. And on a weekly, there's another peak that we start to see more clearly there. So that's GM. That's the technical reason. Talked about the earnings. And let's get into a little more about GM itself, aside from it beating on earnings per share, beating on revenue. And aside from that, NVIDIA collaboration. So here's the deal. They also have some partnerships with big companies aside from NVIDIA. That's not really that surprising given it's General Motors. But it is important to see that they are working on electric vehicle availability, fast charging, and we'll see what they do with NVIDIA in the future. But they are using the accelerated computing from NVIDIA for their manufacturing, not so much for their self-driving. That could change. Most importantly, though, this is the earnings right now. This is super solid. They raised their full year forecast. And then as far as tariffs, they did face significant costs, but seem to be doing all right. And they just found that people didn't want their electric vehicles. The federal tax credits didn't help either. But you know what? The net income dropping doesn't seem to be impacting the stock. So someone is buying this stock, even though there's a 50% plus decline from a year ago, Q3. So this revenue must be doing it. This earnings per share must be doing it. You, me, we don't really have to care exactly why GM is doing so well. Someone is buying this stock. This revenue is as high as it was a full year ago. And like I said, super relative strength today. This is probably what, from 66 to 67. This is like less than 1% in a single day. And yesterday it was a 15% day. So this is a dream scenario if you're a math head, if you like super low risk opportunities. Now, it's not a big deal they're getting out of China. That's probably actually a good thing. A lot of companies are not, US companies are not loving working with China. This recall, this is a lot of cars, but it's not a crazy amount. So all we can really say is they're a dividend producing stock. They're increasing their dividend. They're buying back $6 billion worth of shares, and revenue increased in the last, 3 years. Let's see, that's about 100 plus billion. And then now they're, way down from that. But if we look at the chart back in 2022, 2023, 2021 was crazy. They got wrecked just like every other company in 2022, 2023. And I couldn't tell you why the revenue being so much lower led to such an increase in the share price. But what I can tell you is maybe they have enough restructuring, enough cuts, enough maybe layoffs, whatever it is, that investors clearly love the company. I don't know that they love it as much as, the Mag 7 companies at all. But as far as a pretty large incumbent company, this is a huge percent increase, 100% since October of 23. So 2 years, 100% gain. If we look at Ford, obviously this is not even close to that. This is barely up at all, depending on where you measure it. And sure, I mean, it's not fair to compare it to Tesla, really, from October 23 to Tesla. It's up more than Tesla over that period. So the reason it's not really fair to compare it to Tesla is not really valued on its current revenue, which is what it is, but it's just not, right? This entire move was basically the election euphoria, and then the reversing of that election euphoria after, this was absolutely unprecedented increase that was unsustainable, but also the Trump-Elon falling out, and then this breakout was absolutely beautiful, and then the sell-off on delivery numbers, and now the earnings miss on the earnings per share, the beat on revenue. We'll see what happens here, but on a weekly, Tesla still looks good. However, on a daily, which is what I think is more interesting, if you're looking for a good entry, I think GM has to be the play. As far as actual liquidity, yeah, it's not even close. I mean, this is 30 million on a $50 stock. It's not even in the same ballpark as Tesla, which trades 60 million on a $400 stock. But you know what? Almost no one who's going to come across this recording or live is in the camp where they need that much more liquidity. So GM definitely looks like the play. I've talked about some of the comparisons with other earnings, which is important to look at other earnings in a particular quarter, because, for example, in Q2, there were some drops that basically reverberated around the market. Netflix, of course, being the worst one right now, but even in Q2, Netflix didn't do great. And that's sort of like the canary in the coal mine. Spotify, the other canary for consumer. And of course, the market did have a great September, but after those earnings, it was a little rocky. It pretty much went sideways for a month. So this is the play. This is the idea, GM. And if you like these ideas, hit that like button. If you want to see more, hit that subscribe on YouTube. And I invite you, if you want to make $1,000 in stocks in the next 90 days, I can't guarantee financial performance. The disclaimer is down below, but you do get your money back, provided you have $25,000 to invest at stockscommunity.com. That is the Stocks Community Guarantee. Make $1,000 in 90 days or your money back. Small $25 non-refundable fee to get the bots out, and you can try that out for 7 days. I'll see you over there. See you in the next one.
This is Sam Putnam.
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 All right, let's jump back to some Kevin here.
As exposure to SpaceX. I think we're doing really well on it. I love SpaceX. I love my Starlink. But anyway, we're now going to take money from those entities and feed X, because we really need to fund Colossus 2. Now, Colossus 2 is supposedly going to end up generating or buying somewhere around 300,000 NVIDIA chips. But then Elon Musk updated that to 550,000 NVIDIA chips. And then it was updated to maybe even be 1 million NVIDIA chips. So nobody really knows. All I know is with the posts that I post on X, I get like $63 a pay period here on X. So I'm really not posting on X for the money. And I for like 2 years paid for the yellow check mark, because I was a big fan of like, hey, I'm going to support, free speech or whatever. But, then I get a little nervous when I see stuff like this, and I'm like, man, I really feel like I'm paying and you're not actually seeing the promotion of free speech. You're kind of seeing the promotion of selective free speech. Because anybody who says anything bad about Elon or like even remotely critical of Elon, their views go to crap on X. Maybe not surprising. Now, Anthony Scaramucci, because, this is a trustable face, says that the X-AI merger feels inevitable. Cool. Awesome. Yeah, it's fine. And then, of course, Nikita says, but don't worry, we are blowing up on user downloads for X. Right. And then when we're asked, okay, which countries? Globally. Yes. So how many of those are bots? The X bot problem is problematic. YouTube has actually gotten a lot better at dealing with the bots than X. And Elon bought X, promising to get rid of the termites. The bots. Yeah. So, I mean, when you put all of this together, can we say definitively that X is bankrupt? No, of course not. can we say definitively that X is getting rid of its monetization program? No, of course not. There's no evidence of that. That's like just clickbait drama circulating on the internet. But the reality is, are there probably financial concerns? Like, are they leasing a lifestyle they can't afford buying all these NVIDIA chips? Probably yes. Now, is that why Jensen Huang's like, I love Elon. I wish I could have more Elon in my life. I mean, to me, this is literally like the casino manager from Full House who sees a rich client walk in and they're like, welcome to the Hotel Alibaba and Casino. First class room. Please spend your money with me. Oh, I love you. It's sort of like the guy's just trying to sell his casino. You know, Jensen's just trying to sell his chips. And you gotta give Jensen credit. He's a bad A for being a great salesperson of his chips. I don't even have a chip on my shoulder over that. I got NVIDIA stock too. I keep telling people in my Meet Kevin membership, I'm like, watch, you're gonna know as I'm trimming NVIDIA stock, you're gonna get the alerts. And I'm gonna put it into other investments and you're gonna get to see it all. Obviously, I can't give you personalized financial advice, and I can't guarantee any of the information in this video because, who knows, before I know it, I'm gonna get a letter from Alex and they're gonna be like, we're gonna sue you for revealing this stuff. It's sort of like the same kind of like bully pulpit stuff that goes on. Like, there's literally a guy going, everybody who made a bad video about Binance FUD, you better delete your posts, otherwise you're gonna get your name on a big list and we're gonna identify you as spreading FUD and we're gonna hand you over to Binance to sue you. He's been talking about this for days, about like wanting to sue people and stuff. So I made sure to jump into here. Like, you literally have people who are posting, deleted mine, and he goes, thank you. I see Altcoin Gordon got wise and deleted all. Yup, he didn't have a choice. He was at the top of the list. And this is the kind of censorship that's going on here. So then I reply and I write, make sure you add me to your list, you weenie bitch. And then I link, here's my fear, uncertainty, and doubt video on Binance, because I hate Binance. I don't trust the guy as far as I can throw him. So bring it on. But yeah, there you have it. So thanks for watching, and we'll see you in the next one. Goodbye and good luck.
Why not advertise these?
All right, guys. Let's see what we can jump into for stocks here. Not crypto, but we'll take what we can get here. All right, so company's PARR. This is the chart. Looks pretty interesting to me. And they're not directly related to these power data center companies, but what big companies is PARR related to? They're in Houston. They do renewables as well. I don't think they do energy trading, but are related to Mitsubishi. This is kind of an off the beaten path company, so it's not like they have a partnership with NVIDIA. It's not like they, just had excellent earnings like General Motors. They're not connected to Tesla, even though they're in Texas. This is a small net income, but I think this is sort of a hidden gem that has a lot of upside potential. So let's jump into a little breakdown here. They do have third quarter earnings coming out on November 4th. So here we go. I can see comments over on YouTube if you have any there. Otherwise, I'll see you when I see you on YouTube. There is one stock that is about to break out, in my opinion. It is a refinery stock. So oil, renewables, they're in Houston, Texas. So the heart of energy They're not connected to Tesla. They're not connected to any of the power play Mag 7 stocks or to NVIDIA directly. Of course, every massive multi-billion-dollar company does need energy, but this is more of an off the beaten path hidden gem stock releasing earnings on November 4th. So there's a little bit of time to get into this technical setup that I think looks absolutely excellent. If you stay to this end of this video, I'll tell you about the $1,000 guarantee. This is not financial advice. Let's get going.
This is Sam Putnam.
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 So this is the stock we're comping about. Par Pacific is the company we are talking about, and this is the chart. So basing sideways for a long time, coming over this left side peak in July, and look at the strength today. And if you're wondering why that's so notable, besides it looking like it is notable regardless of context, look at the SPY today. Okay, the market's selling off, Par Pacific showing strength. Someone is buying, accumulating the stock, and there's a great level to risk off of this $36 all the way back to July. So that's the opportunity on a 5-year. We're also coming up to an important level, and that's pretty much the most important spot to look at because all-time highs is in the foreground on the horizon. Not a mirage. This is the earnings on November 4th, so there's enough time before earnings to get in the stock. Look for a move up to 39 on a $30 stock. That's significant, 10% or so, risking a few percent or less, and big opportunity with a very low risk is a total green light. Now, let's talk about this company earnings wise. 50 million is not a lot. Okay, 60 million, but it is a lot compared to a year ago, more than double. So EBITDA for the second quarter was over 100 million, and they did a share repurchase of 30 million. So they didn't come out with some statement that they were authorizing a share repurchase. They actually did one. So that's a major boost in terms of credibility for this company. And while these other power-related companies, GEV, VRT, VST, sort of connected to data centers as well, are selling off a little bit, PAR is on renewable fuels production, whereas these companies are very connected to the data centers that Meta and Amazon and NVIDIA are all relying on. These Mag 7 companies are actually doing pretty well. This is a pretty good looking chart for the Mag 7. So I didn't mention Google, which is also doing great. Apple just reached its all-time high coming into earnings in about a week. So it's hard to say that, Microsoft as well, that these companies are not going to do well in the long run, GEV, etc. But in terms of power companies, I think this tiny power company out of Houston is the play right now. And I'm going to jump into a little more about Par Pacific as far as recent news goes. So these are their peers, and one notable peer as well is this DK. They also operate refineries in the southeastern US, and this is a chart that also looks very interesting. Okay, surfing this moving average, very tight days, and it's just unheard of to see a flag this beautiful with such a good risk on a company so big at a time when a lot of companies are chopping around because the SPY dropped so much last Friday when Trump and China's dictator president had a bit of a back and forth exchange over Twitter about rare earths and tariffs. So I think if you want a faster mover, PARR is probably the move. The volume's drying up, meaning there isn't much selling. I think it's peer doing so well, and it does move well over the last 10 days, but DK is another one that is actually similar, even though I don't know what I just said or if I said it backwards, but this volume is drying up as well coming into this start of a breakout. You're kind of chasing here in my opinion, and this is not a ton of liquidity, right? 1 million or 2 million shares per day on a $30 stock. It's pretty similar to PARR, but it's kind of like this looks pretty strong, and if we look at DK, it almost seems kind of extended if you look at it on a weekly basis. So pick your poison, I guess, but I have to think that the stock that hasn't broken out is the one to talk about, which is the whole purpose of making these videos. Now, Par Pacific Holdings is also related to the Pacific Northwest and Hawaii. So they operate fuel retail outlets, aka basically gas stations, it sounds like, as well as refineries with 200,000 plus barrels per day of capacity. They process crude oil, not just renewable fuels. If you actually look at oil right now, the price is up. That's good for them. I don't know if that's gonna, maintain or not, but it definitely doesn't hurt. So I can't really think of a better company to buy in the oil sector right now. Having some connection to renewable energy is sort of a given on any of these companies. And they took an equity stake in this renewable energy company in Hawaii for $100 million recently. So that's why there's so many mentions of Hawaii in this description. But if we're being super real here, I don't know a ton about what this company does fundamentally. I just know that if you look across the market today, what you're basically going to find is very few companies doing well compared to the market itself, and a lot of companies selling off. NVIDIA, no exception, okay? It's just unheard of to see the SPY selling off this much and to see a company holding up with, this is, I don't know what you call this, 5+%. And it's not like it was a company that recently had earnings like GM that, of course, there are massive moves up on earnings when there's new information coming into the market. Intuitive Surgical also having a big move, giving some of it back. Galaxy, the hedge fund holding company, having a big move and then giving some back on today's move. Actually, they sold off a lot on the actual day that they had the big move. The move that I'm talking about happened in pre-market. So it seemed like there were some opportunities to buy these companies on earnings results, and what I like to do and what has proven out to be a good move is to wait for the bar to close. So if you bought this right as it opened, well, you were in trouble, and if you held it today as well, suddenly you're down another, I don't know what this is, but it's a lot, 15-20% down depending on when you bought it. So I'm super into the technicals. I think GM is offering that for you. Tesla is not, even though they beat on revenue, they did not beat on earnings per share. This DK looks great, but it's not easy to buy a company that's in a channel, even though it looks so picture perfect recently, given the market chop. So by process of elimination, that leaves Par Pacific. That's the reasoning. it doesn't hurt that oil's up and it's in that sector. And if you like these ideas, hit that like button. If you want to see more, hit that subscribe button on YouTube. And if you want to make $1,000 in stocks in 90 days or your money back, head over to stockscommunity.com. You'll see how I can make that guarantee. You must have more than $25,000 to invest, which you need anyway to make more than 3 investments in a 5-day period to be able to open and close them if you live in the US. That is my guarantee to you, and I hope you take advantage of it because I want to make you successful in the financial markets. This is not financial advice, but I'll see you in the next one.
This is Sam Putnam.
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 All right, let's jump into some Felix here.
If you hold NVIDIA stock, tech ETFs, AI-focused funds, or you have money in your 401k somewhat invested in tech, what I'm about to reveal could either multiply your AI investment returns potentially or expose how you're missing the biggest opportunity of our generation. According to McKinsey's latest report, AI data center capital expenditure is going to reach possibly $7 trillion by the end of the decade. But here is what Wall Street isn't telling retail investors. Only 20% of that capital is going to the chip companies everybody's buying. The other 80% is flowing into companies most investors have never even heard. Companies manufacturing the silicon, building the servers, powering the AI data centers that are consuming more electricity than entire countries. My name is Felix Breen. I'm a former investment banker who is now retired and also the founder of the Goat Academy, where we've taught over 20,000 students, and the co-founder of TradeVision.io, where we provide news and data that's better than what most retail investors ever hoped. And I'm dedicating my retirement to teaching regular investors like you and what used to be me how to protect their wealth from the schemes and the financial engineering out there. So for this video, I've done a lot of fact-checking, a lot of analyzing of the semiconductor supply chain data. I've reviewed institutional 13F filings to see where the smart money is actually going and studied the historical patterns from literally going back from the gold rush to the dot-com era, and of course with my research hound Winston, who's not with me today, and the Cat Gang, our chief financial, snoozers. We've done a lot of digging. And what we found isn't just interesting, it could really change how you invest in AI. Today, I'm going to break down 3 critical things that will determine who actually profits from it. First, why the pick and shovel strategy has outperformed direct investments in every major technology cycle, from the gold rush to cloud computing and everything else. And then second, the 3-tier AI infrastructure stack, where that $4 trillion is flowing, chip manufacturers, system integrators, power brokers. And third, exactly which companies are positioned to capture this tsunami of money, why most investors are going to completely miss out. So just have a look on my screen here, and I'll show you what happened in every single tech scenario. Let's just put the gold rush aside for a minute. .com bubble. Most apps went bankrupt. People, pets.com, Webvan, and so on. But Cisco went up 3,800%. Equipment manufacturers, the shovel made the money. Cloud computing boom, that was only a few years back. Again, most SaaS apps failed. But the infrastructure results, people like CoreSite, Realty, they made a lot of money with a lot less risk. And if you look at where we are right now, we have a massive valuation risk. We have huge multiples on big tech stocks. Cisco, by the way, we did go up 3,800%, and then it took 20 years to recover after the collapse. And at the moment, tech is making up 33% of the S&P. So no matter whether you're owning individual stocks or just your 401k or something or mutual fund, you are very heavily exposed. But the true growth doesn't come from just owning the one stock. It's owning the ecosystem that powers that stock and the whole revolution that we're in right now. So what are the tiers? Well, tier one is what everybody's talking about. Is it? Well, no, not really. People actually talk about the chip designers. So companies like NVIDIA, they don't make chips, they design them. Everyone's kind of obsessed with those guys. So who actually makes them? Who's actually got the machines to do it? Well, TSMC, it's the world's most advanced chip foundry. Revenue is up 34% year on year. You have ASML. They are the lithography. They are the monopoly. They're the only company making these machines that we need to make advanced chips. Literally, there's nobody else who does it. Sounds like a pretty interesting stock company to look into, right? You have equipment for chip manufacturing and companies like Applied Materials, KLA Corporation, quality control. Yeah, these chips need to be super, super precise. So there are probably already a couple of stocks you have on your list yet, right? Are these on your list yet? If they're not. Now, before we dive really, really deeper into this, and I want to do that, the most important thing is that you take profits when it is the right time to do it. Because go back to Cisco, people were up 3,800%. How many people do you think locked in those gains? I tell you, most people lost all that money, right? They lack a system, an automated system to sell in the right moment. I will teach you the rules for selling. I'll educate you on that completely for free. It won't be in this video because it'll make this video insanely long. Instead, we're going to run a live training session together.
All right, let's do a little training on stocks that are outperforming right now. Macy's is the one I want to talk about. It's not Tesla, but Tesla is going down right now. So I have to think that it's okay to go off the beaten path a little bit when you see a stock outperforming the market. So pretty solid guidance, pretty solid earnings beat for Q2. And for Q3, well, that's not happening for a full month. Hard to argue with it. Macy's is the company, and stock price looks totally reasonable. Website also looks like it loads pretty fast. So moves about 3% a day. It's a slow moving one. It's a safe stock. Let's jump into a little breakdown on Macy's. Given that its earnings $20 billion in net sales. Here we go. There's one stock that is about to explode in a good way. It is not Tesla. We can talk about Tesla after the earnings reaction materializes. Tesla earnings are out as of the recording of this video. Earnings per share was a slight miss. Revenue beat. So you have to look elsewhere, and in my opinion, the best stock to look at is Macy's right now, which had an excellent Q2 earnings and is up significantly from that date. Doesn't have Q3 earnings for another month into mid-November, so it's an opportunity where you can get into a retail stock that has $20 billion of net sales, even while other retail outlets are floundering, and also showing explosive relative strength today compared to the market. So in the next couple of days and over the weekend into mid-October, late October really, November, depending on when you see this, Macy's is the stock to buy, in my opinion. I'll tell you about this $1,000 dollar guarantee we have going on at the end of this video. Stick around. Let's go.
This is Sam Putnam.
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 So this is a little information about Macy's Q2 earnings. There's that net sales. There's that raise on guidance, which always helps the share price for the most part. And then that earnings per share beat as well. So that's the move. This tells us everything we need to know about the earnings. I guess we didn't really have to ask ChatGPT, but it's good to have both the chart and the info, and it looks awesome. Now, why am I talking about Macy's? It seems like an unserious company to be looking at. Shouldn't I be talking about NVIDIA? Well, NVIDIA is holding this 50-day moving average along with, its peers are shaping up. Meta is holding in there. An even closer one to worry about is Palantir, which had a rough day today like the rest of the market, which was down significantly, not down close to this tariff rare earth scare last Friday with the whole Trump-China conflict. But if we look at Macy's today, it's green. So it has relative strength to the market. Sure, it's sold off a little and then it's sold off on that tariff day as well, but it bounced off this moving average, which is something that actually happens. Stocks do bounce off the moving averages. Funds, individuals look at those averages, and it's a self-fulfilling prophecy. Now it's up over this level, and there's a buy level over about $18 or 18 and change. That's super interesting, where you can risk 50 cents and make, $1 to $3 to $5 to more. If we really zoom out, we can see that this thing just channels upwards. And if we look on a 5-year chart, we can see that it's been a while since Macy's has been interesting. They, like every company, went up in the COVID bubble, went down at the beginning of 2022, mid-2021 really, and it's been a while. That's basically back in early 2024, they were up in the $20 level, and they've got a lot of blue skies just getting over that 200-day moving average right here, which combined with that earnings, those two factors, it's unsurprising they led to that big skyrocket in price. Hindsight's 2020, but I'm giving you a new idea right here over this left side peak in late 2024. Super interesting relative strength. So that's technical overload there. If you want to look at what's going on with the company, I don't blame you. Unfortunately, I'm not a shopper, right? I mean, you probably aren't either. I know most of the viewers are men who watch this. They reported strong sales in basically women's career clothing. Is that surprising, given women are basically owning men in terms of their career, in terms of shopping expenditure too? They've always owned men in that department, but now it's combining to this perfect storm where companies like Macy's that makes that clothing really does well. So they also sell men's tailored clothing and saw some solid sales there as well. But no matter what it is, it's hard to say exactly what it is. I looked at the site as well. The site loads very quickly. It's a professional site. It's no Amazon, but really none of these standalone e-commerce sites are Amazon, right? I mean, it's impossible to be as streamlined and efficient and social proof, well reviewed as Amazon is. So it's a vote of confidence for the company that women's sales uptick is, sensical and also a boost. And if they really are able to do final mile delivery, that makes them a rival against Amazon as well. So I don't think it's just the online stuff, though. I think there's some store closures probably helped. They're closing 150 underperforming stores by next year. So it's makes sense why this company's been beaten down. I'm not telling you to buy and hold this company for a year. I'm not telling you to do anything, but I think as an idea, it's a very strong idea for a move up into the 20s with very low risk, and it's definitely strong after these earnings. This is a very challenging time to just jump into stocks. Netflix selling off a lot on earnings, and Netflix is generally the consumer sentiment barometer, as it was for its previous earnings as well. Of course, this earnings was awesome for Netflix, and a lot of companies had awesome Q1 earnings, which coincided with that April tariff rebound when Trump reversed his stance there. And there was capitulation, the hedge funds, money people got mad at him for ruining the market. Whatever it was, combined for a perfect storm for Q1 earnings to go well. You see that with Intuitive Surgical as well. Now this one didn't hold that, but this is another example of a recent Q3 earnings that was strong, selling off a little today. Again, that being super notable, Macy's relative strength to the market today, which was down. It looks like a little bit only because of how significant this candle last Friday was, but this is actually a lot to go from 670s all the way down at one point to 660s. You know, it's like a couple percent, depending on how you measure exactly. That's at least over 1%. So that's a lot, considering this is the entire market, right? If you want your whole portfolio to go down on just one day, 1% starts to sound like a lot. So that's the play, and that's some of the reason why we're looking at Macy's. They did reduce long-term debt by over $300 million, and they also are a dividend stock. So $50 million paid out to shareholders. They are repurchasing $50 million worth of shares, and they have a huge authorization. Oftentimes with smaller companies, these authorizations are not even close to being met. I don't think Macy's is necessarily going to meet its cap, but it's certainly notable to see they actually have bought back that many shares. So we'll see what actually happens with some of these partnerships. This is sort of an e-commerce 3PL company, so it's a positive sign that they are getting with the times and working with startups. We'll see if there's any acquisitions or collaborations in the future with these sort of forward-looking companies. But if we just take a look at its competitors, right? Who do we think of when we think of Macy's? Well, broadly, Target, sort of turning up, hasn't done well. No surprise here, these retail companies. Walmart is the exception. And they also, a good example of them being the exception was this OpenAI deal, which led to this little bump here. Walmart has had a Walmart Labs division as well that has sort of moved them into the 21st century, even as some of these other companies, TJX, you know, doing well, but not really offering an opportunity to get into. So I wouldn't know how exactly to buy this. It also moves 2% a day, even though, you know, it might sort of look constructive here. It's just barely moving. So at least Macy's has some strength here. It's still a boomer stock in terms of movement, but in terms of chart setup, you know, it's not like IBM is useful as a buying opportunity in terms of, you know, formerly blue chip stocks. And of course, I wouldn't in a million years say to buy something like Ford, which has been going sideways basically for almost a full year, 18 months. So that could change with earnings. GM recently had solid earnings. GM is super interesting here as a buy opportunity, legitimately. But as far as companies that are not going to have earnings for a while, Macy's is definitely the one that looks most interesting right at this time and is low risk. I know it's not NVIDIA. I know it's not some quantum company, but I am sharing this idea for a reason. This has solid relative strength. If you like these ideas, hit that like button. If you haven't subscribed yet, hit that subscribe. It helps more people see the channel, helps put out more ideas. And if you want to take your stocks to the next level, take a look at our make $1,000 in stocks in 90 days or your money back guarantee at stockscommunity.com. That is a legitimate guarantee, and I can guarantee that because the price of the membership after that $25 non-refundable fee to keep the bots out is $250 a month. So if I can't help you make 1% a month, well, I can't help you at all. This is not financial advice, but take a look at that if you want to see some growth. See you in the next one.
This is Sam Putnam.
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 All right, let's jump into a little more Felix here. See what he's talking about.
You can sign up at felixfriends.org/training, and I will literally teach you the same rules that I learned and how I do it. So we don't sell when we're up 30% or something random. No, there's actually a structure to it, and I want to walk you through it in a bit more detail. So grab yourself a seat and let me know you've grabbed yourself a seat in the comments. Just write S or something in down there. But let's just dive a little deeper into the manufacturing monopolies. I like investing in monopolies because they have pricing
Take a
power.
look at that. In just
You need
a
our stuff, you need to
moment.
pay it. NVIDIA, AMD, Apple, they all use TSMC. They get most of their revenue from the most advanced tech, these teeny tiny nanometer chips. And they're trading at a 23 times multiple versus NVIDIA, which is 80 or whatever it is. So interesting bet, wouldn't you say? Obviously, you got to come to your own conclusions. This isn't financial advice, but I think it's worth looking into. What about the ASML? Well, they're the only lithography machine manufacturer out there that can make these modern chips. They cost almost $400 million a piece, and it would take like 15 to 20 years to replicate their business. No one's going to do it, so these guys are going to keep making money. Tier 2, you have the guys who build the chips into actual AI servers that work. Who are those? Well, you have Supermicro. They build AI servers. Liquid cooling leader. They have a 23% market share. You have Broadcom, who build custom AI chips and networking. Look at the revenue growth there, 220%. Google, Meta, get their custom chips from these guys. You have Marvel Technology. I made a whole video on that the other day, Marvel Technology. I think it did rather well for some people. Did you do well on that stock? Let me know down below. 78% growth, right? So they make custom silicon, electro-optics, data center. Revenue is insane. Now, we go a little bit deeper on these guys, and I want to show you again here, the multiple, the valuation of Supermicro is a fraction of what NVIDIA is. Now, they make money, by the way, whether NVIDIA wins or AMD wins. A lot of you guys are rooting for them. Broadcom, by the way, works with every single hyperscaler. So they work with Microsoft, they work with Amazon, they work with Google, they work with everybody, Meta, they work with all of them. Oracle, all of them. You name them, everybody works with Broadcom. And then you have the guys who keep the power on, the power and the cooling. Because the biggest problem with these chips is that they create a lot of heat and they need a lot of electricity. Right now, 4% of US electricity production output is used by data centers. It's going to be 12% in 5 years. So it's a 3 times increase, and it's a big problem. Now, a problem is always profitable. So these are the power brokers out there, and we've covered some of these as well in the past in videos we've done. So make sure you're subscribed to the channel and you get these even earlier. Eaton Corporation, their data center sales are up 45%. They have an NVIDIA partnership. GE Vernova, I've talked about them a lot. 600 million in data center orders. Siemens Energy.
All right, let's jump into a little AMD breakdown. I think it looks super interesting. That NVIDIA OpenAI agreement was big, but the AMD OpenAI agreement is also big. So here we go. I can see comments over on YouTube. I don't think Palantir is a great spot to get into. And SC is saying Macy's is a strong buy rating from Zacks. I don't know how much weight I put in buy ratings, but it doesn't hurt. We'll jump into a little breakdown here. There's one stock that is about to skyrocket. They recently did a deal with OpenAI, Sam Altman's future $10 trillion company. The scale of this monopoly in the making is unprecedented. OpenAI did a deal with NVIDIA, where NVIDIA invested in OpenAI, keeping them afloat so they can eventually wean themselves off of Microsoft's servers. Microsoft gets 49% of their revenue for now. Now, OpenAI turned away from NVIDIA and said, you know what? We need to diversify away from just NVIDIA and away from Microsoft as well. Let's do a deal with AMD. That is the ticker that I think is a good spot to buy right now. OpenAI could get 10% of AMD, which is incredible that they were able to negotiate that. But if your stock price goes up 20 billion and you're going to get 10 billion in revenue from OpenAI paying for their processing power, then everything starts to make sense, even after you have to give up some of your company to ChatGPT and its shareholders. Let's jump into the chart and hit that like button if you want to see more of these videos. I'll talk about that $1,000 guarantee at the end of this video, so stay tuned. It's not financial advice.
This is Sam Putnam.
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 So this is the OpenAI deal. Multi-year agreement, 6 gigawatts. I believe that's quite a lot of watts. And the exchange is 10% of AMD's company. So it's kind of a pretty massive give up for 10%. But at the same time, look at what the stock did on that agreement. It went up 30%. So 10% doesn't seem like such a bad deal anymore. Now, the one challenge with this spot for AMD is earnings. It is Q3 earnings season, but the earnings are actually not for a while. They're in early November. So, I don't know, 2 weeks is what it is. But I think there's enough time to use this spot that AMD is at to your advantage. And we can talk about the NVIDIA deal. We can talk about OpenAI. We can talk about ChatGPT. But if we're being real, the opportunity here is really not about what might happen in the next 5 years. If you have anything less than $1 billion that you're trying to put to work, which, I'm half saying that facetiously because I know it's unlikely that any hedge fund manager managing more than that is going to watch this video. But the point I'm trying to make is look at the relative weakness in NVIDIA, in some of these other companies. Palantir, pretty bad weakness even to the market. And then look at AMD compared to the market. So it's down a tiny bit. When you look at what this is, 237 to 228, that's only a couple 3% at max. So when you look at its peers, maybe, it's a little bit dependent on other factors, but these are really not viable for the most part, in my opinion. Whereas when you look at this guy, it's offering a buy spot. And the reason I think this had some strength is you've got, flag setting up here, and I think it pulled back with the market, but definitely held because that flag is still interesting to a lot of other investors. So we can compare all these companies. Intel is another one that is setting up in sort of a similar formation, but you can't really buy because earnings are so close. So yes, this looks interesting, low risk opportunity to get in maybe after earnings, depending on that result. If that result keeps the price up above this price agreement level. But the only move, in my opinion, is the one that doesn't have earnings for a couple weeks, was already setting up, did give that pullback that's sort of expected after 3 green days in a row, held up, looked like it was giving that breakout opportunity, and then with the market pulling back, didn't go, okay? Market pulled back a lot today at one point. It did close stronger, but it wicked down almost to half of that tariff drop. So that's pretty notable. If the market recovers and then, definitely if it breaks all-time highs here, AMD is super, super positioned to get up into these 250s above this high. So definitely want to keep an eye on that. And of course, if we look at a 20-year chart, this is all-time highs. And again, all-time highs, all-time highs in just a couple weeks after that 244 level. So that's enough technical gobbledygook for now, just to make sure we can sort of separate some of these companies. Intel, the government took a 10% stake, which did boost Intel's stock price, but keep in mind Intel was basically left for dead at this point. So it's not really that similar to these NVIDIA moves and OpenAI moves is what I meant to say. When you look at some of these OpenAI deals, Broadcom recently did an OpenAI deal, and at this point that sort of OpenAI luster is starting to turn into a nothing burger. There's only so many companies that you can partner with, and eventually you're going to find that the stock prices don't jump up like they were. So this is the deal with OpenAI. This is back about a week ago. This is on the 14th. They're collaborating with Microsoft, backed OpenAI. Microsoft obviously wants to retain that control over OpenAI. OpenAI trying to diversify. And yeah, strategic ecosystems shift away from NVIDIA is what Broadcom wants. So everyone is trying to jockey for position. This is the agreement, multi-year partnership. And this is ASIC, application specific integrated circuit racks for OpenAI. That is technology that pretty much every big Mag 7 company relies on one way or another. OpenAI is going to be no exception, but we don't have to look into exactly what this networking agreement does for OpenAI, because clearly what the market said was this is not really that notable. And if we look at that spike, yeah, there was a spike, but it got sold into, and then it's almost back to basically where it was before that deal got announced. So the OpenAI deal luster is wearing off. The Walmart spike was significant, but it wasn't crazy. I mean, 5-6%. So I think we're starting to get to the point where it's like, okay, yeah, we get it. They're all agreeing to keep this GDP chugging along, bubble, whatever you want to call it. But until NVIDIA turns up from this 50-day moving average, maybe breaks into all-time highs, NVIDIA being sort of the leader of the market, not sort of, it literally has the largest 2% about of the market. I don't know that new OpenAI deal news is going to matter that much. Now, with that said, it did kick off this move in AMD, and this AMD move has sustained in a way that Broadcom move didn't, and the way that Walmart move may have been sort of a one-time deal. I don't know how excited investors are about Walmart, given that the benefit is maybe more to Walmart than to, OpenAI. Whereas with AMD, you could say that, AMD could also be propping up OpenAI, given that they're making the semis, which basically allow OpenAI to exist at all without massive processing power. They literally cannot function, but they can definitely function without Walmart. So that's the technical setup. That's a little bit of the context around recent OpenAI deals and movements in share prices that I think is relevant. And if you like these ideas, hit that like button. If you want to see more, hit that subscribe on YouTube. And if you want to take your investing to the next level, we have a guarantee where if you don't make $1,000 in stocks in the first 90 days at stockscommunity.com, you get your money back. $750 back in your pocket. You can head over to stockscommunity.com to see why I make that guarantee. The limitation is that you do need $25,000 to invest. You need that amount anyway to make more than 3 investments in a 5-day period, which is helpful to know that you can close out an investment if you need to. So this is not financial advice, but I think that's a pretty awesome deal, and I want you to succeed. See ya soon, one way or the other.
This is Sam Putnam.
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 All right, let's jump back into some Felix here.
Well, they make power plants. Pretty dull, but it's something to look at. ABB, also pretty dull, but again, they're involved in all sorts of electric equipment, especially if you want to build a power plant, you're probably going to be working with ABB as well. Now, the next generation of AI chips are going to need even more power than the current ones. So there is this enormous data center demand increase here, which will create a lot of opportunities. But how do you put this all together? Look, I'm not saying you shouldn't be in AMD or an NVIDIA. I'm also not saying you should be in any of the other ones. This is financial. I'm just sharing with you my research and how I look at things, and hopefully you get a ton of value out of this. I think adding some TSMC, some ASMLs, and applied might be things to look at. So think about it. Do your own research. This is the beginning of your research, not the end. If you want this to be the end of your research, well, then you better go and buy an ETF, a big broad index fund one, because you're lazy. And it's good to be lazy, but try to be efficient, not lazy. It's your money. You worked a lot of hours to earn it. It deserves the attention that it needs. The second tier, we would then go to your Broadcoms, your Supermicros, your Marvels. Dell and HP are also potentially in there because they build a lot of server racks. And then in the tier 3, you go into energy, basically. And there again, I gave you a couple of tickers that are worth looking into. You might also want to keep a bit of cash on the side because there is always an opportunity that we haven't quite seen yet. So I always have a bit of cash on the side. And by the way, the profit taking I'll teach you on Tuesday pretty much takes care of the cash problem because it'll pretty much provide you some cash any given opportunity. So make sure you're signed up for that, felixfriends.org/training. So what's our action plan here? So first of all, audit your current portfolio. That's the first thing. What have you got? What do you own? Where's your exposure? Decide your allocation. How much money do you want to have in AI? How much money do you want to have in each tier of the AI? Join us and learn when do we sell. It is the exit training, the exit webinar, because that's the most important skill that most people don't have, and it really moves the needle. And then you build your positions out gradually. We don't just go all in on day one. I certainly do it gradually. And then you're going to want to review that. You might want to review that quarterly. If you're more of an investor, if you're more of a trader, you might want to review that weekly. I do that every Sunday. I look for new ideas. I figure out what to do with the new money and the things that we've sold. And then we learn and we learn and we learn, and we always get better. And that would be honestly my number one advice to you would be learn, because it's a skill. Investing is a skill. Investing in any company is a skill. In any of the sector is a skill. You don't need to be a super expert on the product even, or the company, but you do need to understand the couple of criteria that make up a good company, a couple of criteria that show you where the money is flowing into it, and the couple of criteria that tell you when it's time to take profits. And one of my golden rules is like, never let a big, beautiful profit slip away. So my promise to you is you join me on Tuesday at felixfrancis.org/training. I will fulfill that promise for you. And you are never going to have a big profit slip away then. You got some value out of this? Imagine the value if you join the live training, and just share it with people. That's really what this is all about. We're a community where more and more people from all walks of life, from all levels of knowledge and experience, come and learn and share. And my hope is it makes more and more and more of you free, because that's really, I think, what it's all about. When you are freer, you can do beautiful things, and you can help others, and you can have an impact. And I thank you for watching. If you're worried what's going to happen to your favorite tech stocks this coming week, you found the right video. We're going to run you through Palantir, SoFi, Nvidia, AMD, Intel, Tesla, United Health. We look at some of the bigger tech stocks as well, like Apple. We look at the NASDAQ and the S&P market overall. And when I look at the stocks that are making us money, and I'm just putting...
All right, let's see what stocks can make us money. I think Dell is the one that's interesting. I don't know if you've seen the move in Beyond Meat, but it was pretty significant, and I can see comments on YouTube. Definitely would not short Beyond Meat right now. Okay, let's jump into a little breakdown of Dell, the one and only Michael Dell fame, the long-standing computer company. There's one stock that is about to move up. I think it is a company that has a long-standing 30-plus year relationship with NVIDIA. It also may partner with xAI, Elon's competitor to ChatGPT, to the tune of a $5 billion potential contract. That's sort of rumored, it's not completely confirmed, but this is a dividend-paying stock that is at a very important technical level that's low risk to you. So while there's all these high-flying moves in Intel, and it's crazy to think of a high-flying move in Intel, but that's what happened with that government stake. You know, NVIDIA is interesting, but if you want to buy NVIDIA right now, you're sort of making a bet on what its Q3 earnings are going to be, which do happen at the end of Q3 earnings season. Tesla's just came out and they missed earnings, even though revenue beat. So buying before earnings is a gamble, in my opinion. I think this company, Dell, D-E-L-L, is a low-risk opportunity right now. If you stick around to the end of this video, I will tell you about our $1,000 guarantee in stockscommunity.com. If you like these sort of ideas, hit that like button. Let's get started.
This is Sam Putnam.
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 So this is Dell, and this is the reportedly $5 billion deal from Reuters. This is a lot, okay? This is for the Colossus expansion in Tennessee. I have heard of this Colossus Center. I have not been to Tennessee. I think this is a big deal for Dell, which, let's be honest, this is not the most company that we think of as innovative, right? I don't think of Dell, even with Bloomberg. I don't even think of Bloomberg as particularly innovative at this point, yeah? So this relationship with NVIDIA also is a vote of confidence. This is a pretty massive projected sales growth. 50% is crazy for a company that's been around this long. And then they also have a partnership with Microsoft for an Azure cloud product. Intel collaborating with Dell. I'm sure you've seen the Intel Inside on Dell computers or similar computers, but they are coming into the 21st century with some AI high performance computing capabilities. And a partnership with Meta as well. So they're definitely making an effort to put themselves in the center of this AI boom. We'll see how CoreWeave does. CoreWeave stock has been interesting lately. This is Dell stock first off, which looks like it's holding up in a way that is positive over this left side peak that it held here, and then offering another left side peak here, which is holding up with some relative strength today, despite you see this overlay in the background, the market coming down today. When you do see a stock hold up despite that, right here, not going down, that's pretty positive. So not only is it great to see some compressed days where you can get an investment in here and only risk a few dollars, which is awesome to risk 1% or 2%, with the opportunity for a 5-10% move up, if not more. That's the opportunity here. Now, as far as the CoreWeave mention, CoreWeave has been a tough one. This is a recent IPO AI provider. They do the infrastructures, so they had this $14 billion deal with Meta here. And since then, they've just been channeling up, resting on this moving average, but then selling off and really not materializing here. So it's just sort of a reminder that when a stock doesn't behave, and this one has not behaved, it's been wicky and choppy and up and down and up and down. It just is an indicator that, well, it's not going to go. So that's a bit of a technical detail there on CoreWeave. But in terms of Dell's other partnerships, it's the big names and it's the companies that have been around for decades. So I think those are going to continue. I don't know that this is going to be the next high-flying, move, but of course you're not looking for that if you're thinking about a company that has a $20 billion run rate, and that's just in their AI segment, which is exciting, don't get me wrong, but really what you're looking at with this company is its existing revenues and servers, etc. Almost 20 billion in Q2 of next year. This is expected. This is a little bit fruity here, whatever's going on, whatever Dell said from their website is a little bit fruity here, but we get what they're trying to say here. This is good. And if we look back at this August release of the revenue right here, the earnings reaction was poor, but they did come right back, and they've certainly had an awesome September, just like the rest of the market. I mean, 40% though is pretty awesome for a company of this size. And now they're setting up over this level, going back all the way to September and July of 2024. So looking to the left does matter. It's not just something to look at. It literally represents where people bought and what prices were worth buying at or not worth, you can see it went down significantly in 25, in this latter half of 24 until the tariff rebound. This is an important spot. So never want to hold into earnings. That can be a gamble. This earnings is at the end of the month, end of November, that is. So there's actually a long time to take a position and then give that position time to work. Not saying that you're going to take a while to take a position. I'm just saying that you need some space. You can't be jumping into companies like, well, before today, Tesla. Tesla looked great before today. And that's a great lesson, you know. This is why you don't buy stocks before earnings, because you don't know, even though Tesla looks super strong, recovering this market pull that pulled all the stocks down, you know, if you get rid of this, this bar here, if we can correct that, you know, Tesla looked pretty awesome holding this level, this bar being representative of all big caps because of Trump's comments. It had nothing to do with Tesla specifically. So it broke out, it held, it still held. And if you're just looking at the chart, you're not thinking about earnings, well, you're really kicking yourself, shooting yourself in the foot. So yeah, we'll put that back in because it did happen, but this is what can happen when you buy before earnings. And this is why some companies are interesting. Macy's, after earnings a while ago, because there's room to hold coming into earnings at the end of the month, end of, well, November in these two cases for Dell and Macy's. So that's why I've been mentioning them on top of the reason that they have good price structures with low risk, and on top of the reason that they've held up well in the latter half of 2025. This is a big, big deal if they can help this materialize. The enterprise AI market is massive. There's going to be companies that are also poised to benefit from that, Snowflake being one of them. One of these software companies that's had massive growth in the face of AI. Meanwhile, Salesforce, people are kind of pricing in the idea that, hey, I don't go into Salesforce basically at all currently. I'm definitely not going to want to go in there if I can just ask a chatbot, hey, tell me how our last 100 customers, you know, used our software, right? Maybe that would be a basically internal use of the tool, but you get what I'm saying. You don't want to look at a bunch of fields in a database, in a CRM, customer relationship management software, when you can just ask an AI agent to do it for you. So that's the problem. It could be a problem for some of these other software companies as well. Duolingo being an example, that if they don't get with the program, with the AI program, they're going to be not faring well. Coursera holding in there because they, what do you know, OpenAI to the rescue as well. This was October 6th, so this was actually well after this spike on earnings. But these companies that do software are trying and trying and trying to send the message that, hey, OpenAI. See, I'm using OpenAI as synonymous with AI, but it really is the case right now. AI is going to happen, and they're going to participate. Is what they're trying to say. So, yeah, you don't have to buy stocks like Macy's, although I think it's a good buy right now. Zacks also says Macy's is a good buy. You can buy networking companies, computer companies, server companies. Tech has always been a great spot in the last decade or more, a comfortable spot to get positioned in, and Dell's at a great spot right now, even better than NVIDIA, I would say, which is sort of a toss-up as to whether it's going to hold these all-time highs or break this moving average. You see, there's only so many times it goes below that moving average you see on these wicks before at some point it just loses that spot. So Dell is the company, and if you like these ideas, hit that like button. If you want to see more, hit that subscribe. And if you want to take your portfolio to the next level, head over to stockscommunity.com, where I guarantee you will make $1,000 in stocks in 90 days or your money back. That is my guarantee to you. I can make that guarantee for anyone investing over $25,000. I think that works out to about 1% a month. If I can't make you that, help you with that, then I don't want your money. I'm not a financial advisor, but I think these ideas are pretty good ones. See you in the next one.
This is Sam Putnam.
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 Okay, guys, let's jump into a little more Felix here. See what he's got cooking here.
Goldman Sachs just sent a note out to all its institutional clients, basically telling them which way the market's going to blow for the rest of October and for all of November. And I was reading this here as I was relaxing with Winston over here, and we're just back from like 2 trips, and I thought, it'd be an interesting thing to read. And I thought, this pisses me off. I tell you why it pisses me off, because why is this not in mainstream media? Why doesn't everybody have this data? And of course it is because the world isn't a fair place. So Winston said to me, well, why don't you just share it with people? Because we have here basically the 5 or 6 step roadmap to what's actually going to happen. So if you agree with me that we should all have access to the same data and information, let me know down below in the comments. Just write agree. And I'm going to walk you through it. I'm going to do one better for you even. I'm going to put the entire report in full into our free community. Just go there. There's a link down below, felixfriends.org/resources, and there's a link down below, and you have access to that. Just find the video and it'll be attached to it. It's also a nice way for this community to stay alive should YouTube decide to ban us again, which they did last week if you hadn't noticed. So let me walk you through this here, and it's kind of probably starts with all the most important things, but I'm going to put the charts on the screen here for you. Hopefully my editor is going to do that. And to kick us off with this guy who's like their fund flow guru, sorry, very noisy cats. He's saying that October isn't going to be that great, but that November is going to be fantastic. That's also what Albert just dug out here in the research. And if you literally look back from 1928, so give or take 100 years, the rest of October is usually pretty choppy, and I'll put the chart on the screen here for you. But we then enter the golden period of the market, and a lot of people are starting to get scared because there's all this talk about the AI bubble and everything else. And again, they're not going to participate. So from the S&P, from now to the end of the year, has gone up 4% on average since 1928. The Nasdaq's done double that, 8%. That's pretty significant.
Okay, guys, let's jump into a little breakdown here. I know that it's exciting to talk about Q3 earnings and seasonality and all that, but I do think it's more interesting to look at individual stocks, and CrowdStrike is in that category for sure. So if you do have any comments, I can see those over on YouTube. Otherwise, I think we'll jump into a little breakdown. Crowd does have some connection to big companies, but I don't know that they're the most exciting stock in the market right now. You know, no one talks about CrowdStrike as much as they talk about NVIDIA, as much as they talk about even companies like the Mag 7, Meta, Amazon, Apple. CrowdStrike is not really in the conversation, even though they are a massive company. So we can see why ChatGPT needs all these GPUs, or says they do. This, of course, has nothing to do with my network connection. It's ChatGPT misbehaving or trying to do more than they can. So, of course, we go to our friendly socialite Claude to look for some major connections. and see which one we can highlight here. I know that they have some big ones. I mean, this is a ton of customers, but 6 airlines in the Fortune 500. They did have that outage, yeah. That was a big deal. It's a lot of flights. And that was in July 2024. But if we look at the chart back there, that was definitely rough, but they recovered. So all's well that ends well. And let's jump into a little breakdown here on CrowdStrike. So AI-driven endpoint connection. Here we go. I can see those comments on YouTube. Otherwise, we will get going here. There's one stock that is about to skyrocket right now. They are a cybersecurity stock, and with AI ramping up, security is more important than ever. This stock was the subject of controversy in the middle of 2024 when they had a bit of an outage, and that wouldn't be such a big deal except they're a cybersecurity stock. So when you serve a lot of companies in the Fortune 500, including airlines, and thousands of flights have to be canceled, that's a problem. So since then, CrowdStrike, CRWD is the ticker, has gotten back above a stock price that it fell to after that mishap, and it's looking strong heading into Q4 of 2025. If you like these sort of ideas, hit that like button. If you stick to the end of the video, I will tell you about our $1,000 guarantee, and let's get going. This is not financial advice.
This is Sam Putnam.
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 So this is the July 2024 CrowdStrike outage and the airlines affected. So it was all 6 airlines in the Fortune 500. Delta, United, American, grounded, about 1,000 flights or more, which is pretty gnarly. So this is the scale of CrowdStrike's ripple effect. Billions of dollars in damages, healthcare companies even involved, as well as banks. So it's no joke. Government agencies use CrowdStrike as well. They've investigated cyber attacks. There was the Sony Pictures hack, which was a little bit the subject of humor, but also Democratic National Committee attacks. So they're basically integrated in our entire working world. And if you look at the chart you can look at a weekly chart even, July 2024 was definitely a make or break moment for this company. It basically got cut in half. I mean, not actually, it went down from 60%, but it certainly looks extremely significant. Is that not in half from 400 to 200? I don't know how this, yeah, I guess negative 50% is cut in half. Anyway, so if you go down 50%, to go up to that same level, you have to go up 100%. That's sort of the beauty and the curse of percentages. But incredibly, CrowdStrike was able to do that, and now we're at all-time highs almost again after June of this year. So that is the buying opportunity for CrowdStrike right now. They sort of undercut this level, and then now we're coming to a buy level again. it is a slow moving stock, about 3% a day, and they do have earnings coming up, but not for more than a month away as of the time of recording this video. So the strength is notable, and then even on a granular level, just today, if we look at the market, it's down about equivalent to a couple of days ago. And if we look at CrowdStrike, well, it's not even close to a couple of days ago. So definitely something shaping up here. This is not an option idea. I don't know exactly when it's going to go, but there's an opportunity to buy some equity, risk $5-10, and definitely make 20 or more if it does go up. So there's no guarantees in life, but I think this is a pretty great opportunity. CRWD. And if you look at its peers, a Zscaler also shaping up, and then Rubrik software as well, sort of holding, not great. You have to think that this is the best opportunity compared to Zscaler, mainly just because of, I think this is a little bit choppy. It sort of reminds me of like a hymns in terms of going up and down, and then ultimately there was a failure there on hymns. So I'm not seeing, wiki CoreWeave price action, but I do think this is a better go than a sort of up and down move like Zscaler. They move about the same percent each day. So I know I'm not a day trader, you're not a day trader, but it never hurts to sort of be aware of what could happen on any particular day. So on today, there was a lot of strength there. So that's CrowdStrike. Now, a little difference between its peers. They're all trying to leverage AI, of course, or say they do. Rubrik, big SaaS company. CrowdStrike having all those Fortune 500 clients. And this is a major competitor, Zscaler. Neither of these have had outages of the same magnitude as CrowdStrike, but also if one company is responsible for so much of just everyday computing, you have to think it's pretty important. So this is a pretty massive ARR, 20 billion, compared to Rubrik, which is a little over $1 billion, and then a few billion for Zscaler. So they're not really peers in the sense of revenue. They're more like, a monopoly and then some follow-on competitors. And if we just look at market cap, it's sort of apparent, although these market caps are pretty high considering how the revenue differences are, 20 billion versus just a few billion of revenue. CrowdStrike's market cap is not quite reflecting that. So you could say it's undervalued, although you could also say that, you know what, this scare was pretty illuminating, and it scared a lot of people away. So that scare is probably going to be priced in for a while, and until some sort of new information comes out about their AI offering that gets the focus off of that outage, it's probable that that's going to always be in the back of investors' minds. So it is what it is. They also had a follow-on sort of outage in October of last year. This is quite a lot of computers. Airlines again being affected. Now, of course, this is what they would state, but the tough thing about being in security is that everyone hates you, right? Because when everything's working, there's nothing to talk about, right? There's just, why are we paying for this thing where nothing, it doesn't make us money. And then when you have an outage, it's, why are we paying for this thing that just cost us a lot of money? So it's definitely a cost center. And now it just has to shake out as to whether they're able to compete in this sort of AI world. So I've looked at a lot of stocks recently with these Q3 earnings coming out. Dell, Macy's, even Tesla. But as far as stocks to buy, I do think CrowdStrike is in the mix. And it's in the mix because its earnings haven't happened yet. So you're not gambling on earnings. So you're not buying a Galaxy Digital after it just went up on an earnings reaction and then sold off, and then the market sells off the previous day. So I'm not a proponent of just buying stocks that have good earnings coming into pre-market. This is not a breaking news type channel. It can be in certain cases, but right now these earnings reactions are not great. This is Tesla's earnings reaction so far today, this afternoon, this evening. And then Netflix, which released earnings a couple days ago, is down significantly. So talked about GM being interesting, solid earnings reaction, super relative strength. Talked about Dell, which has some space before its next earnings. Macy's has some space before its next earnings. And by space, I mean you can buy it for a couple of weeks and you don't have to worry about earnings messing up your position. And now CrowdStrike also in that bucket with a safe level to buy off of, probably in the 490s, somewhere in that range, 495. And, it wicking off of that moving average, maybe wherever that moving average ends up in the next few days is where you buy. And then looking for $20 a share or more, which works out to about, $50 would be 10%, so 20 is a little under 5%, somewhere up in there, as a first price target, risking 1% or 2%. So that's the technical price level. That's a little about the company. And if you like these ideas, hit that like button. If you want to see more, hit that subscribe. If you want to take your stock portfolio to the next level, look at our $1,000 guarantee in detail at stockscommunity.com. I'll tell you what it is. I guarantee you will make $1,000 in 90 days in stocks or your money back. So our help, my help, costs about $250 a month. And over 3 months, that's $750. So if you don't make $1,000 over that period, I give your $750 back. There's some testimonials on there already from people who had success with these ideas. Check them out. This is not financial advice, but hope it helped.
This is Sam Putnam.
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 This is Sam Putnam.